Welcome to this sphere day, which is on Sunday 28th of May. Now what I want to do is look at what I consider to be some high probability chart setups. Now in terms of the technicals, we're going to be looking at the charts in a moment, and in today's video we're going to be using our favourite indicator in Forex to back up our view of the charts, which I'm sure regular viewers know is the COT, or Commitment of Traders Reports. Now if you are new to our videos and want to know more about the COT, you can click on a video link beneath this one. If you want to watch the video through now, just very briefly, the way we use the report is we always want to be trading with the smart money commercials when they diverge away from non-commercial speculators. That become clear as we look at the charts in a moment. Now, in terms of the charts we look at this week, we look at a couple we looked at last week, Euro JPY, Euro USD. We also looked last week at Euro CHF. I'm not going to look at Euro CHF this week. It's quite a slow moving contract. Our view hasn't changed. We're going to be looking at Euro CAD instead, so 3 euro pairs. I also want to look at AUD CAD, which I think is going to become a really nice downtrend, and I want to look at AUD CHF, which we looked at a few weeks ago, which has become a nice downtrend, and just give you a simple way to get into a trend in motion. Now, the other day I did do a video on price action trading. I was saying, yeah, if you're a price action trader, you can't set ambitious targets in terms of where a pair might run from, just pure technical analysis. And you can't, okay? It's only going to be a few hundred pips forward, in my view. Now, the technicals alone cannot tell you where, how far a pair is going to go. You need to know the big fundamentals behind the chart or the sentiment, okay? That is the only way it can be done. Then you can set more ambitious targets like 500 pips or more. Okay, so that's one of the big advantages of using the CFTC net traders. They give you a shortcut to the big fundamentals and also the sentiment of the market. The commercials have done the work for you. Okay, so it's a great way of trading. My own view is, I made it clear in the video I did the other day, price action trading is very, very hard in terms of making decent money from it. Because obviously you have big news events and the big fundamentals that can skew the best chart formations. A lot of people wrote to me and said, they've seen price action traders make a lot of money online. My answer to that be, where? I don't see any price action traders who say it can be done give their trades, okay? They'll say it can go to X level, it might reverse or go up. When it has, they'll say they're right. The real difficulty, of course, in Forex trading is getting an entry that gives you good risk reward, placing your stop, and then managing your trade to target, okay? So my own view is, if you really want to be successful at Forex trading, study the CFTC net traders positions. Now, right, what we'll do now is we will look at some charts and then we'll come back and sum up. So the first chart we're going to look at is going to be Euro JPY. The Euro JPY daily chart, let's first of all take a look at the CFTC net traders ratios. Now, in terms of non-commercials, they're 3.8 to 1. In terms of longs over shorts, so bullish bets. Commercials 3.4 to 1 in terms of shorts over longs, or bearish bets. Got a ratio or divergence of 7.2 to 1 between the groups, which is up on last week. It was at 6.0. Now, in terms of what we're seeing, just generally on the CFTC net traders, is the non-commercial speculators being, bullish about the euro and generally bearish about the yen. But what we want to be, obviously, is with smart money commercials, and the commercials are accelerating their selling of the euro and buying of the yen. Now, last week I put an ADX line on, which is the red line at the bottom. Average directional movement from Wells Wilder. It's a really good indicator for indicating the end of a strong trend, okay? Now, the trend can be up or down. You have to look at the trend for yourself. And then when the turn down comes, it's a warning that the trend could be about to end. And I did say I'd do a video on the ADX. I will do, actually, because you really only want to use it in strong trends, and it's only a 40 turn down that matters in our view. Right, now what we've done is we have come in at 124.80, so we popped above the round number here, sold it back through. We did go down quite nicely below 123. Okay, now we've bounced back up. Now in terms of our stop loss protection, what we're going to do is when the ADX is turned down, we'll normally look at the candle before, put our stop behind that. Okay, we've got a round number at 126. I want to give it a bit of room, so we've gone 126.60. You can see here you've got those two bodies, this tail across, couple of highs here, body here, and that tail there. Test that tail, and now we've come off. Now from our perspective, yeah, we're looking for a good decline here. And notice we bounced from the 20-day moving average, got the 20-day moving average here. Okay, also corresponds with a round number. Okay, so that is the level of support. I think if that is decisively taken out, then we are going to see a decent decline. And yeah, I've drawn the line, sorry, across the 20-day and the 124 level. You can also do a couple of bodies here. So if you're coming in, you wouldn't want to come in right at 124. Okay, give it a little bit of room. 124. No, sorry, 123.80 even. Now, where do we think it's going to go to here? Our own view. Sorry, let me just draw that across there. There, that's better. You can see where the support is. Sorry, my apologies. There we go. So we've got the bottom of this body here, another body here top, another body here bottom. So yeah, we just want to get the 124 level cleared out, get through 123.80. I think we're going to go down. Now, obviously here we have a gap. Now, my own view is we are going to go down to 118. Okay, so basically 123.80, we're going to see a really big decline, in my view, down to the 118 level. So from the perspective of, let's say you wanted to get into this trade, obviously it's a sell back towards the recent high or Friday's high. And, you know, if it doesn't get back there, just take the breakout below the 20-day moving average. You can say, you know, obviously a little bit of support here about, hold on, let me just draw it. It's about 121.50, okay? I just think that level is going to be run, and we're going to run all the way down to 118. So we'll see how this one goes. I think we are going to see some decent downside action. Last week not much happened, but in the week ahead we'll see, but I'm looking for a decent breakdown. Let's move to the next chart. Okay, we're on Euro CAD daily. I just want to go to the CFDC net traders positions up in the top left. Non-commercials 5.4 to 1 in terms of longs over shorts or bullish bets. Commercials 3.1 in terms of shorts over longs or bearish bets, gives us a ratio of 8.4 to 1, which is one of the bigger divergences on the CFDCs this week. And I did say, yeah, when we look at Euro JPY, there has been a move by the commercials to just generally sell the euro across the board. There are also heavy buyers of the CAD across the board last week on the CFDC net trader, so a nice divergence. Now, I've isolated a turn down on the ADX here from 40, which occurs on this candle here. So you got 1, 2, 3, 4, 5 candles really that tested the 152 level and couldn't take it out. So we're expecting some downside here. We see the 152 level as good resistance. Like I said on the last chart, if you're putting a stop in, don't put it just right behind 152. Give it some room, like 152.60, for example. Just before I talk about entry on this one, there was actually another 40 turn down on that candle. You can see it. There's the turn down, and it did have a nice little bit of a fall from 151 down to about 148.50. Looking for this turn down to do a little bit better. Now, in terms of upside momentum, to us it seems to be waning. We've got this 5 tops here effectively, and then we've got 3 here. Okay, now in terms of support, you probably spotted the support, which is 20-day moving average. Okay, so from our perspective at the moment, we're in at 151.45. Come down to the 20-day moving average at 150.30. So a little bit of profit, but I'm looking for more. I might basically, we'll see in the member centre on Monday, I might just take half the position out maybe, then sell it the other side of the 20-day moving average. I just want to see if it's going to break on Sunday evening. Yeah, I'm sure anyone knows in our member centre we do not close positions very often over the weekend. So we had a bearish close, so we'll wait to see if we take the level out. Now, in terms of the 20-day, you can see you've got another candle bottom here as well. Let me just get rid of that line, sorry. So 20-day moving average, double bottom at the 150 level. If you want to come in on weakness, yeah, don't sell just below 150. Give it a little bit of room. I would say 149.80. Let it clear that level. Get away from the round number. Now, I'm expecting, yeah, a decent fall to the downside here. We've got, basically tight volatility or low volatility. Where could we go? Well, I generally look for gaps to be filled. And I think if we look here, that would be the target. Okay, gaps generally agreed or fear, and I think there's been no change in the euro fundamentals. And yeah, we've just gone to the upside. We're losing momentum. I think we could roll over, even if we don't get to 145. I think we're due a move to 147, possibly over here. We could just have to see how it runs, but this one for us is losing upside momentum. Like I said, if you want to come in, yeah, sell her through the 20, or if she bounces back up towards this resistance here. I think, the CFTC net traders are now pointing to a really decent decline in this one. So we're going to see how this one pans out. Okay, we're on the Euro USD daily chart. Let's have a look at the CFTC net traders ratios. Now, in terms of non-commercials, they're 1.6 to 1 in terms of longs over shorts, which is not a big amount or a big divergence, so to speak, but they did add in 27,241 longs. Okay, commercials 1.4 to 1 in terms of shorts over longs. Again, not a big divergence, but they added in 31,619 shorts. Now, what we're seeing now is the commercials really come in to sell the euros, while the non-commercials are obviously buying. The ratio is 3.0. It's double of last week's divergence. Now, like I said, it's not a big divergence, but what is significant is the way the groups are speeding up. Okay, so it's the rate of change that interests us, and also the switchover came in terms of the commercials have been generally long the euro for 3 years, okay, until 3 weeks ago. Non-commercials be generally short until 3 weeks ago, and both groups have now reversed their positions. Okay, so what we've seen effectively, I just want to highlight this gap here. This was when Macron won the election in France, saw a move up. We did retrace back, see, 2 tests of the 20-day moving average, and then a really accelerated uptrend. Okay, and now the accelerated uptrend was done on basically the view the ECB are going to raise interest rates. We think that view is absolute nonsense, as we've said in our member centre and in previous videos. They're not going to do it, in our view. And I think the way the commercials are moving, they probably have that view as well. Even if the ECB do, cut stimulus or do something or indicate it, it's in the price. Okay, so from our perspective, these two candles here, the two bodies I'm crossing here, this is where we're topping out in our view. 2 pokes above, we've got another poke up here, another poke up here. So we think this is now decent resistance there. In terms of downside in this pair, we haven't seen much of it. We're in short at 112.45. We have come below 112 now though, so I'm looking for this to follow through next week. Now, in terms of our perspective, and with our stop, this pair has got heavy speculative interest in. We know it can be spiky. Our stop back behind the round number 113.60. We're giving it plenty of room. We're looking this week for the euro to lose a bit of upside momentum. Now, in terms of the ADX, I put the ADX on this chart as well. You can see we have got a move above 40, but we haven't got the turn down yet. Okay, I think if the turn down comes next week, that could reinforce the bearish view. Okay, so where could we go to? Well, I think we will go to the 20-day moving average. Would look to be a good first stop, wouldn't it? So this red candle here, but generally what I'm looking for is, like I've said before on the other charts, is the gap to be filled. So looking for this gap to be filled here, down to 107.30. So if this one comes to fruition, I think there is plenty of downside. We'll see next week. I still think she's a sell back to this double trend line resistance. I think the euro rally should fail. So we'll see how this one pans out next week. Let's move to the next chart. We're on the AUD CAD, and I'm doing the weekly chart before I move to the daily chart because I just want to set the targets off the bigger chart. Now, in terms of the CFTC net traders ratios, non-commercials 5.4 to 1 in terms of longs over shorts or bullish bets, commercials 3 to 1 in terms of shorts over longs or bearish bets. We've got a ratio or divergence of 8 to 1, so a big divergence. Now, in terms of last week I was saying the fundamentals in our view have shifted in favour of the Canadian dollar. We've got a bear commodity cycle in place now, which is more bearish for the AUD than it is for the CAD historically, and the AUD normally acts as a proxy of risk. It's the currency that is most likely to go higher when stock markets go higher. It's not tracking the S&P 500 higher anymore. We saw the S&P have a really good rally up to new all-time highs last week, but look at the AUD, big red candle, and notice that she's come off this, what I would consider resistance level here, this body, this bottom of this body here, bottom of that body, tail hits it, can't get through, come through the 20-week moving average, and we finished near the lows. Now, from our perspective, target 1, 96.50, okay? Target 2, 93.50. Now, I think longer term, we're going to go even lower than 93.50. But obviously, in terms of, if we do get to 93.50, obviously, we'd be very happy. We need to see, obviously, how we go. What I want to do now is just shift to the daily chart so you can see potential entries. We are on the AUD CAD daily chart, and in terms of the heavy commercial selling, it came in up towards the 103.40 level. You can see it's double top here, a nice big fall down. We've elected to come in through 101.80, and we take out 101.80 on this candle. We do bounce from the 20. We don't think it's going to go higher. Take out the 20-day moving average here, work our way lower, bounce back to test here. Another test here, reversal, and now we're moving to the downside. So our view is that this one is topping out, and we are going to go, as we saw from the weekly chart, significantly lower. Now, in terms of resistance, you got it, in our view, at the 101 level. Okay, on the down sloping trend line, you got the 20-day moving average snaking down behind. So 101 looks like decent resistance to us. Also, you could cross those two candle bodies there. So you've got double trend line resistance and the 20-day MA to sell back to. Where should the stop be? Well, my own view is one level back. So across those candles there behind 101.50. Okay, so she can be sold on the bounce, or you've got near-term lows here, which also line up with an outer Bollinger Band. I think if we come through this level here, you could sell her as well. And then the stop, obviously 20-day moving average is going to snake down. So put stop back one level behind the first level of resistance, which is probably still be behind the 20-day moving average. So bounce higher, seller, issue break support, seller. We've seen from the weekly chart, there's plenty of downside potential here, and the commercials are very bearish. So we're looking for a decent downside move. Obviously, over the last couple of weeks, we haven't seen too much. It's been fairly choppy, sideways with a downside bias, but this one I think could turn into a nice trend. So let's move to the next chart. The AUD CHF daily chart, we looked at this one a couple of weeks ago. I just want to revisit it. And in terms of this pair, I see it as a similar setup to AUD CAD. It's going to be a really nice downtrend. It's actually already developing into a nice downtrend. But yeah, in terms of the last report we did on this, we said we could go down as far as 66, and we're at 72.50 at the moment. So there's plenty of downside potential here. And I just want to go through how to get into existing trends. Now, just before I do that, I just want to look at the CFD net traders ratios. Non-commercials 5.3 to 1 ratio of longs over shorts or bullish bets. Commercials 1.6 to 1 shorts over longs or bearish bets. We've got a divergence or ratio of 6.9 to 1. Now, a couple of weeks ago when we looked at it, it was above 10 to 1, but we've seen a little bit of narrowing of divergence, but it's not indicating a trend change. Now, when we did the last video, I was saying it was heavy commercial selling up into this level here above 75, and I actually missed selling it, so I wanted to take it through 74, so through 73.80. I think when we were on this candle, we were due a rally, saying, yeah, just take her back to 74, the 20-day moving average, just see how the rally unfolds. Well, she slices 74, nearly gets there. Then we do it on this candle here, but immediately we reverse and come through 74. Now, personally, I think 74 now is going to provide, decent resistance. And in terms of getting in on existing trend, bounces to the 20-day moving average, I always think, are good. I would expect that we're going to come back at least to here, okay? So, if you're not in it, just wait for the bounce. Between 73.50 and 74, I think the rally will fail. Our stop at the moment is just behind the next level back, which is here. Now, 73.80, we're at 72.50. It's not a big profit yet, but I'm hoping that this one really keeps grinding to the downside. A little bit of lightening of the CFTC net traders positions this week, but they'll do that when they think things are a little bit oversold in the short term, so we can expect to rally, but we do not expect a trend change. So I think we could run a lot lower. 66 I think will be on the cards in the coming months. So it's for me a good long-term trade to be in. And I think this one is all, you can see it from the chart, it's obviously already in a downtrend. I think AUD CAD is going to do something similar. So AUD CAD, AUD Swiss, I think could be decent long-term position trades. So let's just quickly sum up on a few points, and sorry, that's my view of the charts. We'll go back up that short view there, 5 Forex pairs. Now, in terms of my view, that's my view right now. Obviously, it can change in line with the market conditions. If you want our full trading techniques, our daily technical analysis of major Forex pairs, simply click on the link beneath this video. Now, if you are new to Forex trading, you do need a trading edge. I think the COT can give anyone a trading edge because the smart money commercials have a fantastic long-term track record of catching big trends and big turning points. So you're basically getting real experts on your side. So I think with the COT, fantastic tool, and keep charting nice and simple as well. Now, just one point I want to make in relation to trading, which I think a lot of beginners in particular make the mistake of. They're always going or looking for the perfect entry. Really focus on getting a great entry. I don't think it's a good idea to look for the perfect entry or whatever. You just want an entry with decent risk reward, as we saw in AUD CHF. Also, don't do what a lot of traders do, which is not pay enough attention to the stop. You need to pay as much attention to your stop as to your entry. It's got to give you good protection, but it also mustn't be in noise where you could be taken out in a stop cluster with other speculators. Now, you'll notice, when I'm doing those charts a moment ago. Yeah, our stops are normally at least 100 pips, probably 150 pips, maybe even a little bit more. A lot of traders say, well, that's really wide. No, it isn't. Not if you're looking for 300, 500 pips on the other side, okay? That is what I would consider to be a sensible stop loss. If you look or you study the volatility of most major Forex pairs, they nearly all move by at least 100 pips a day. There's no point in putting a stop within that noise, in my view. Yeah, I think, as Forex traders, we do need those big winning trades. So you're going to have to risk a little bit more, but all you do is you just adjust the trade size. Okay, a lot of traders make the mistake of they want to do a big trade size. They believe in the trade, but because the size is so big, they put their stop too close. Don't do that. Work it out. Your stop. Okay, how much you need to risk, and adjust your trade size accordingly. In terms of other pairs, I will be doing my weekly forecast tomorrow. Been a bit slow with it over the last few weeks. We've got a bank holiday in the UK tomorrow, so plenty of time to do it. So we'll run through a lot more pairs. We'll see what the markets do in the coming week. I must admit, I think over the last couple of weeks it's been pretty boring. Yeah, we haven't seen too much volatility. The markets seem to be waiting for something to happen. Low volatility never lasts for too long. Hoping we're going to get into some high volatility in the coming weeks. So what I'll do is I'll come back with the forecast tomorrow. If you've ever got any questions or queries, please feel free to email me. Thanks for watching me as usual. Take care. Have a good day.